Hi there, and thanks for joining us here at Phillip Capital Market Watch. I'm Samuel Seal, investment analyst from Phillip Futures. Amid the current COVID-19 situation, markets have continued to be erratic. Despite a window dressing effect that resulted in global indices experiencing some reprieve towards the end of March, the gains were soon given back when April arrived. However, since the start of the week, indices seems to be edging higher once again. Hence, the question of whether markets have started recovering remains key on many investors' minds. Today, we will be looking to answer this question as well as how to ride on the trading opportunities the markets are offering. We will be looking at US markets in particular, as it is the world's largest economy and tend to influence the trajectory of other global indices, such as Singapore. In short, we may not be out of the woods yet. Although there have been mostly upbeat tone in markets amid more signs that the COVID-19 crisis may be easing in some areas, Italy, France, Germany, and Spain have reported a lower number of cases, and deaths in New York and UK have slowed. The COVID-19 pandemic is still spreading across the world. It's noted that some countries are now witnessing a second wave of infections. Hence, despite the lockdowns, stay-home orders, social distancing rules, and border closures appearing to be relatively effective in controlling the spread, it has significant effects towards the economic activity itself. Hence, the economic damage is expected to continue to climb and would reflect downwards revisions to global growth forecasts. This is projected to result in the global economy plunging into a recession and present more possible downside risks for global indices. At present, economic numbers have been downbeat. Service industries across the globe are rapidly contracting, in addition to manufacturing. This is due to the lack of traveling and tourism, spurring a drastic dip in service demand. On the US front, there was also a plunge in the US hiring itself, as seen from the job numbers in the graph below. This hinted at the extent of the pandemic's toll on the world's biggest economy, with unemployment rising as seen from the drastic jump in jobless claims. Upcoming officials are expected to show more of a hit. For now, it has been expected that the global cost of COVID-19 could be as high as 5% of global GDP, amounting to approximately 4.1 trillion US dollars. While a shorter containment period could limit the damages, it is still too early to determine how long the current COVID situation will last or how widely COVID-19 will spread. Hence, with lockdowns across nations remaining rampant and expected to prolong, coupled with economic data already showing a glimpse of severity of the impact, we remain of the view that it's unlikely there will be near-term recovery for US indices, given that the uncertainty is still present and that the underlying risk is still left unresolved. Currently, a medical breakthrough as well as the peaking of the cases in COVID-19 infections as well as deaths is key in putting calm to markets. Despite the S&P entering the bull region and cross the 200 EMA, it may not be sustainable. At present, while there has been positive development across the medical space in developing a cure and vaccine for COVID-19, there has been little breakthrough nor concrete timeline on when it can be developed and mass produced. Therefore, until that issue finds certain levels of clarity, it remains too premature to call a recovery in global indices. We remain cautious at the moment on the impending downbeat economic data, as well as the rising corporate costs of the pandemic and subsequent shutdown. While the fiscal and monetary stimulus implemented could help ease off some of the COVID-19 attributed financial burden, it still remains to be seen if measures will be sufficient, especially if COVID-19 does not ease off soon. Since the volatility in markets could continue due to the struggle between opposite market forces, CFD trading could present an opportunity for investors to partake in the market action. At Phillip Futures, clients are able to trade indices as well as oil CFDs using the MT5 platform at zero commission. There are also many trading tools available, such as the pattern recognition program AutoChartist and Trading Central. These tools are available to aid with decision-making process along with the various technical indicators available. With CFD on MT5, you will be able to long or short the various indices as well as speculate on the movements of these indices. That's all for Phillip Capital Market Watch. Do remember to like and follow us on social media and subscribe to us on YouTube. Also, tell us what do you think. Do you think markets have recovered? In addition, if you would like to get started in investing in indices, futures, forex, or oil, feel free to approach any Phillip Futures representative. Leave your comments. Thank you for joining us and see you soon.